Hi, welcome to the first long wave forecasters video. As you can see here, I've got gold, spot gold. The chart is a daily chart. It spans from mid 2014 out to present. Now, what I'm looking at here is a very large corrective process that's going on, which is following the very large decline into this wave A bottom here. If you remember, gold topped out in 2011 at around 1900, I think it was 1910, and we hit a bottom here in November 2015 of, I think it was 1132. Since then, we had a corrective rally in three waves, A, B, and C, which brought us to an A wave high. We're at the end of a B wave decline, which is traced out three waves, A, B, and C. This B wave decline, once finished, should bring in a C wave rally, which should end above this 1308 top here. So it's useful to kind of zoom out and see where we stand in the overall structure at the end of a week, at the end of a week's trading. If this is indeed a B wave, and it is indeed in three waves, and we should see the end of that, the C wave, trace out a five wave structure. So we seem to have a 1, a 2, a 3 in place. We could be working on a 4 and then into a 5. Let's zoom down a bit closer and see if we can get in here and kind of figure out the muddle of what's happening right now. So, yeah, okay. Now, this would be the C wave coming off our B wave high of the overall three wave expanded flat correction since our 1132 low. Now, if this is the top of the A wave, or sorry, if this is the top of the B wave within the final C decline, we should see it trace out five waves. Now, if you can see here, we seem to have a wave 1 down, a wave 2 up in three waves, a wave 3 down, a complicated wave 4, which I haven't been comfortable with, and haven't been great at calling, which I think has broken down into an A wave up, some sort of a B wave, and a C wave rally. Now, what we'd like to see is five waves down off this again to finish the whole five wave structure. Wave 1 may equal wave 5, and if that's the case, I just want to go back to the first chart we had. It would be an interesting target to have around the 1040 here. This just happens to be 161.8 times wave A, and it just happens to be where wave A might equal in length wave C. You'd be told we're eyeing a band in here of around $15. So it seems to be attracted to that. It's attracted to in my mind anyway. Whether it works out or not, we'll see. Let's drill down into this final structure here and see, can we pinpoint what's going on. Now, you see you have this kind of dithery upward corrective motion here. And the reason I'm calling it corrective is, even though we have the five waves up here and a three wave decline here, this whole thing here, this whole structure, it overlaps far too much, and it does not fit a kind of a motive wave. Now, again, I could be wrong, but to me, it just doesn't fit. It doesn't fit the picture. So I'm labeling all this as the correction since the low of the wave 3. So we've had an A, a B, and a C wave rally. Since the top here, which we called, we've had a 5-wave decline, a 3-wave correction, and I believe we're working on the wave 3 of this 5-wave decline. Now I've put a kind of conservative target of 1080 there. Ideally, it would meet and exceed the bottom of wave 3 here. So our band we're looking for price to hit before we start turning bullish on the price would be between the bottom of wave 3 here, which is about 1077. So 1077 and what I showed you in the previous slide there would be 1050. So if it hit 1077 and it looked like it traced out 5 waves, then we'd start to get very bullish, and we'd say that the turn could well be in at that point. We'd try to look for confirmation after that and see would we get a 5-wave advance and a 3-wave decline. But at the moment, we're looking at extending our decline into the low of wave 3 here of 1077, and that looks like it might play out over the next week, if you can see here. Now we move on to euro dollar, and let's again take a wide angle view of things at the end of the week, just to kind of reorientate ourselves. It's good for me too. I need to reorientate myself. You tend to zoom in as trading goes on during the week, and you just tend to lose focus of the larger picture. So since the 08 low, which was about November 08, we've had this very large contracting triangle, which played out over a number of years. So we have this large contracting triangle, which traced out 5 waves in A, B, C, D, E, which finished up in the middle of, April, let's say, 2014. Since then, we've had this, as expected, as you would expect from a wave 3 down. It's this large, very fast and sharp decline into the low of March this year. Now I'm labeling that wave 1 down off a triangular wave 2. So you had a 1 down into the 09 low, 08 low, A, B, C, D, E is wave 2. Wave 3 should take the form of 5 waves, and I've labeled it as wave 1 down, and we're working on wave 2 up. Now, our opportunity lies in here, in what happens next. Let's zoom down in here, and we'll get a closer view of what's happening now. Now, this is our decline into wave 1 down. And what we'd expect is an ABC and a decent retracement into, somewhere around 50% mark. 50% mark of marked here at 122.20. If we get an ABC rally off the low of 104, 104.50 around, what we've already got is a 3-wave ABC up to form wave A. A through wave ABC form wave B. And what I believe to be the start of a rally into wave 2 in the region of the 120, 122. This rally should take the form of 5 waves. And I think there's an argument to be made that we've already had wave 1 and wave 2 of that. So let's get in here and see what the action is doing and where opportunity might lie. Right, this was the high into wave 1. Here's our ABC off that wave 1 high into wave A. ABC off into wave B. And what we might be working on as a 1, 2, 1, 2. There is an alternative count on this, which I have in the back of my mind, that this whole structure may end up being a triangle. Yeah, so this whole structure may turn out to be some form of triangle. I'm using Occam's razor at the moment and just saying that the simplest answer is usually the correct one, so I'm labeling this as an ABC decline, or a flat correction. It may turn out to be an A, B, C, D, and E. Either way, if this is in fact a B wave here, and we have got 1, 2, and 1, 2, either way we're expecting a short-term decline into the 110 area, which will present our buying opportunity, which will be wave 3 of 3, which will be the most points, least risk. So let's zoom in here and see what we've got. Now here's our first suspect wave 1, but wave 1 we're calling it ABC wave 2. Here's our wave 1 of 3, which so far has played out okay. We've got an AB, and we're working on a C wave decline off that. We should get a pretty decent retracement off that. We should get a 50%, talking about 50%, well, you know, wanting to touch 50% anyway. So next week we should see declines in the euro dollar. The model would like to present us with a 110. The model wants a 110. Whether we get it or not is another thing. If this is the case, if that's a simple zigzag, we should have 5 waves, 3 waves, 5 waves. In the region of 110, we'll be talking about getting bullish on that then. It will present our opportunity. Let's get in there and see what the opportunity might look like. Right now you see the 30-minute chart showing the decline of the last week. So we had this rise to finish wave 1. We've had an A wave, a B wave up, and a C wave. We're working on a C wave. This could be 1, 2, 1, 2, 3, and the rest that follows. We can see here we've got well, the structure is a little bit of a muddle. I can see in this B here we've got an A wave up, A, B, C, D, E wave down, and another C wave up. So either way, we're looking at declines into the next week. Let's see how that progresses. Let's see how both charts progress on both gold and euro dollar the next week. I think our opportunities are close at hand. We're talking about 1,000 points on euro dollar and maybe 2,000 points on on gold. So that's a very substantial payback. Our risk reward ratio, we should be able to get a very decent risk reward ratio. So thanks for watching. Hope you enjoyed. I hope you find it interesting and useful. Hopefully, we'll come back and revisit it next week. Happy trading, and hit subscribe. It always helps us. Thanks very much. Bye bye.